Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be relied upon as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It is just general in nature only. You cannot go past what is going on in US data. It is incredibly robust, and that is the right word. Looking last week, going hand in hand with the week before, CPI numbers and also the growth numbers, you then start to look at the forward-looking gauges, and they are really, really strong. Philly Fed Index last week went back to the level we'd seen in March. New records in things like price taken and price received. That's an incredible thing to start seeing. New orders were also incredibly impressive through the Philly Fed Index. Have a look also, retail sales, incredibly strong. Smashed expectations, smashed last month. Industrial production, same thing, particularly when you have a look at industrial production went negative in the month of September. It's now not only positive, but up 1.8% versus a contraction of 1.3%. That is quite the turnaround. And it really does highlight what we are hearing and seeing out of the US, that they are driving ahead. It explains why wages are starting to really move, why employment is so incredibly robust and continues to be so, and gets back to that inflation rate that we know that it is sitting at 1970s levels in terms of what it's doing overall. That price increase, that growth increase, you can't ignore it. It's so incredibly prominent and impressive. Yet there is a clear caveat for this week, and that this week's trading is all around what happens in Washington and pretty much what all happens at the House. The White House will be the big talking point this week because it's clear the market is waiting for a catalyst, particularly the bond market and to some extent the FX market, about who will be the next chair of the Fed. There are two candidates left, we know that, Lael Brainard or Jay Powell. And the caveat is whether or not the president does go down political lines and selects Lael Brainard. She would be quite a mover in terms of what's going on there. We know she wants higher regulations on the financial side, but more stimulus to come to support the economy. It would be quite a big jumper. It would move the US dollar probably lower. It'd bang up equities quite quickly. So that's the catalyst, and that might explain why last week yields just didn't move. You would have expected them to do so. They should be rising because the idea that the US can have this current accommodative theory for such a long period into 2023 would probably be starting to unwind, but she is clearly the only thing that might be holding that back. So from our perspective, watch that space. She is the caveat. She is the mover, because if you look at the dollar, it is driving ahead against everything, and it should be, particularly those areas and nations, unfortunately, experiencing a fourth wave. So look at euro dollar, hit a 16-month low last week of 113.20. Yes, it jumped up 0.5 cent towards the end, but in saying that, have a look at the trajectory. It was only about 3 or 4 months ago we were talking about 117. 6 months ago, 121. That's an incredible fall in terms of what's going on in the euro. At the moment, the differential between growth for the next sort of 6 months is clearly skewed in the US dollar's favor. You then also look at dollar yen. That trend is still very, very strong. Real yields had a little bit of a glitch last week, and it can explain why it eased off, but at 114.5, the momentum there is still very strong. And then the Aussie, that's under real pressure too. Hit a new 1 month low, but you can't go past the fact that the RBA is dovish, iron ore prices are sinking, and again, the differential between growth of the US and Australia over the next 6 months is probably skewed in the US dollar's favor. So all those would suggest why the US dollar is remaining strength, but the big caveat and the thing to watch is what happens with Lael Brainard. Is she going to be there or not?